And Coinbase Global Inc. may surprise Wall Street by turning profitable for the first time in 2 years, bolstered by Bitcoin's recent resurgence and cost cuts made during the last crypto winter. Needham & Co.'s John Todaro expects the biggest U.S. crypto exchange to post net income of $103 million when it releases fourth quarter results later Thursday, and that forecast goes against the outlook of much of his peers, who expect Coinbase to record a loss of around $16 million, or 5 cents a share, according to analysts surveyed by Bloomberg. Like most exchanges, Coinbase becomes highly profitable during bull markets, since both retail and institutional investors typically trade more, boosting fee revenue. Bitcoin jumped almost 60% in the quarter, capping a 157% annual rally ahead of the January launch of U.S. exchange-traded funds that invest directly into cryptocurrency. Whether the ETFs help or harm Coinbase in the long run remains an open question. In prior quarters, a soured on Coinbase when it was stunned by an industry-wide decline in trading. They still have an image of Coinbase as an unprofitable company, said Owen Lau, an analyst at Oppenheimer & Co., who also expects the exchange to report a profit. I think it can start changing, and that may already be priced into investor expectations. So Coinbase's shares have dropped around 2.2% since December, after surging almost fivefold last year. The price is still less than half the record high set in 2021, and Coinbase rose as much as 7.8% on Thursday, after JP Morgan raised its recommendation on the stock to neutral from underweight. The broker noted that the surge in Bitcoin price has crypto market and Coinbase earnings power higher. Bitcoin has jumped another 25% already this year, rising to more than $52,700. And Coinbase was unprofitable through the crypto downturn that started in early 2022. Revenue plunged by more than half in that year from its 2021 all-time high. And during the downturn, Coinbase co-founder and chief executive Brian Armstrong laid off hundreds of workers, helping to lower expenses. A return to profitability would likely set the groundwork for a recovery in 2024. Todaro said he forecasts net income of $1.2 billion for the current year, compared with a likely $75 million loss for all of 2023. Analysts surveyed by Bloomberg expect a $27 million loss this year, despite anticipating revenue growth. And one of the biggest concerns is whether U.S. retail users, Coinbase's bread and butter customer base, will come back as token prices heat up. So much of the recent activity has been driven by institutional buyers, analysts said, and what's so more, the ETFs may pose a threat to Coinbase's core business. Some of the exchange's retail customers may opt to buy Bitcoin through the ETFs instead of Coinbase. The exchange charges fees for trades, while most of the ETFs are currently, at least temporarily, fee-free. The ETFs changed the game, said Ryan Coyne, an analyst at Mizuho Securities. The ETFs are likely going to be a catalyst that drives industry prices lower, not higher. The ETFs may already be pressuring fees. On February 1, Coinbase said it may charge no maker fees to traders from other exchanges, with over $500,000 in monthly trading volume. The firm's market share declined to 5.41% in January, from 6.5% in the year-ago month, according to CCD data. And while the exchange is the custodian for 8 of the Bitcoin ETFs, we think the direct revenue coin has earned from custody has been de minimis from the ETFs. Todaro said in Coinbase Custody's Bitcoin balance has increased by more than 4% in January from December, according to blockchain analytics provider Elementis. Its Coinbase Prime Bitcoin transaction volume, coming from institutional customers like ETFs, nearly tripled from December to January. Elementis estimated based on on-chain data, but institutional clients pay much lower fees than retail traders. Meanwhile, derivatives trading volume fell 35% to $1.7 billion in January from December, according to data compiled by CCD data. The decline hence with the subdued trading activity on Coinbase following the ETF's approval. Also weighing on its outlook, Coinbase is still fighting a lawsuit from the U.S. Securities and Exchange Commission, accusing it of operating as an illegal exchange broker and clearing about what Matthew as the victim. Inside of this, the Judge Normal economy was the power of Jane time, a new scene time, and the challenge of time had. The charges 17 people, and Coinbase can be perceived to be a much stronger company in 2024 because they were just under very harsh, extreme scrutiny over the past 2 years from regulators and investors last said. I do think Coinbase comes out much stronger after the scrutiny.